Hi, today I am going to show you the magic of price action trading. Yesterday I saw one magic in the share market. After seeing that, I just want to share with you. That's why I create this video. This is two different index and two different chart, but we can see some similarity between these two charts. Market opens with small gap down. Here also market opens with small gap down, but it was little small. Market takes support somewhere here and bounce back. Market takes support here and bounce back. After reaching the particular point, market take reverse and it came down. Here the market trying to came down, but the market was closed. After reaching this point, market is trying to came down, but the market was closed. First, let us name the index. This is Nifty chart. This is Nasdaq Composite. Some of the famous YouTubers are continuously saying the foreign institutional investor initially they bring the market down. After sometimes the domestic institutional investors step into the market and they pull the market up. Here we have a domestic as well as foreign institutional investor. The domestic institutional investor is going to be a LIC, STFC mutual fund, Axis mutual fund. They are going to be a domestic institutional investor. Obviously, foreign institutional investor going to be a American institutional or American retailers going to be a foreign institutional investor. We know the American has lot of fun. They are investing in the world market, not only in the Nifty, in Japanese index, in Chinese index. They invest in all type of index and make a profit. They get loan from the Federal Reserve and make profit in the share market and bring back the profit to their country. This is what happened worldwide. Here we have a two type of institutional. One is domestic and another one is foreign institutional investor. The domestic institutional investor always support the market and the foreign institutional investor always bring the market down. This was the famous thing said repeatedly by some famous YouTubers. But let us explain one thing. Here the Americans going to be a foreign institutional investor. But in the case of Nasdaq, they are going to be a domestic institutional investor. Rest of the world is going to be a foreign institutional investor. You know, Americans have a lot of money and lot of power. They can bring any market down, any market up. They can bring any currency to depreciate. For example, Thailand currency was mostly depreciated because of American portfolio investor. But in American, they are going to be a domestic institutional investor. You can see the same type of pattern in both American market and Nifty. Who is going to be a foreign portfolio investor here? This was clearly cheating or trapping. If the American selling here, why the same American selling in their market? You can understand my point. If rest of the world cannot bring American market down or up, then American going to be a domestic investor in Nasdaq. Why the same thing happen here in Nasdaq as well as in Nifty? This is clearly a trapping, clearly a stop loss hunting technology. If you need to aware about this, you need to know about price action patterns. Let us explain about the price action pattern in next chart. I hope you will understand my point. Whether it is foreign institutional or domestic institutional, that is not a matter. Here the trapping and stop loss hunting continuously happen in all market, in all retailers' money. From escaping this trapping, you need to know about price action pattern. Then only you can able to escape from this kind of trapping, and you can able to make money in share market. Let us enable the indicators, that means CPR and support and resistance. After that you can see clearly what happened in world market. Now you can see clearly what happened in the market, I just enabled center pivot, top CPR, bottom CPR, S1, S2, S3 and previous day low. This is S1, this is S2, this is S3. Here this is S1, this is S2, this is S3. Here this is top CPR, bottom CPR, center pivot. Here this is top CPR, bottom CPR, center pivot. Market opens with a huge gap down. After seeing the gap down, retailers start short sell and kept the stop loss here. After reaching the support, that means S3, the institutional or the big players came and buy heavily and bring the market up. After taking all the stop loss of the retailer, after reaching exact the center pivot, market start reverse. This is what happening in all world market recently. Opens with a huge gap down and start falling. After reaching S3, it took support and bounced back. It retraced up to center pivot. After reaching the center pivot, it start fall again. This is what happened in world market recently. This was clear trapping. If you want escape from the trapping, you need to aware about S1, S2, previous day low, all the price action pattern. After seeing the big bullish spin bar, don't take any position initially, just wait. After seeing this bullish spin bar, just enter at this candle close, keep the stop loss just below the candle, book your profit at center pivot. This is what I am saying repeatedly in my pre-market report. The same thing happened after seeing the bullish spin bar. Just enter at this candle close, keep the stop loss just below the candle, book your profit at center pivot. This is what I am repeatedly saying in my pre-market report. This was happened recently in the worldwide share market. This is the magic I was saw yesterday, because yesterday I have an open position. That's why I just watched US market, how it going to be traded. After seeing this magic, I can't believe my eyes. This was repeatedly happen in the world market. This is how the retailers are been trapped repeatedly in the world market. You may ask one thing: if you enter in this candle, where are you going to be keep the stop loss? So you did not enter with this candle. You must enter above the support, keep the stop loss just below the support. You can ask the same question here. After reaching the R1, we can see the bearish pin bar. Why we did not sell here? Yeah, we can sell, but we need to keep the stop loss. Once the stop loss triggered, you must quit. Here you can see 2 times market trying to take the stop loss of the institutional, but they bring the market down. Institutional stop loss never going to be taken, because they have a that much power. If they keep stop loss, the market will not take the stop loss. They will bring the market up or down. So always go institutional way. Whether it is foreign institutional investor or domestic institutional investor, the institutional are continuously trapping the retailers and HIG, higher income group. Then only they can make money in share market. We can make money share market in 2 ways. One, investing in stock and investing in company. The company work for us and give return to us. Other one is we can pull the money from others account, others retailers account. That was recently happened in the share market. This is the magic I saw. The same pattern whichever in the Nasdaq, it is happened in the Nifty also. There is no domestic, no foreign institutional investor. Both are trying to trap retailers. That is the common thing happen worldwide. You can see this is yesterday's Nasdaq chart. Here you can see the time, and this is today Nifty chart. Here you can see the time. This is how the retailer has been trapped continuously.